Hi there, Daryl King.
Rakhee Dhingra, Mortgage Savvy.
So today we're going to talk about interest rates as of December 11th. So this is December 10th as of today. What is the interest rate going to go? Is it going to be 25 points or 50 points? So the biggest consensus says 50 basis points. So to me, it'd be a kick in the butt if they give us 25, because I've been wholeheartedly telling everybody 50. So here's what some of the big banks are. Scotia Bank, the cut is going to be
25.
only 25 basis points. CIBC,
CIBC has indicated that it would be 50 basis points.
Right. TD Bank, 25.
25.
Scotia Bank says, 50 here on this one here. CIBC, 50. RBC, 50. BMO, 50. So the mass majority are predicting 50. Bank Canada raised it 10 times between March 2022 to July 23rd, then paused in early 2024. Rates were cut 4 times in 2024 with the current policy rate at 3.75. So the upcoming decision hinges on whether the cut will be 25 or 50. So we just talked about all the banks except for TD predict 50. So what are your thoughts on that?
This is much anticipated and
But are you
much
predicting
needed.
50 or 25? I'm going to go out in a gut and I'm going to say 50 because that was my first thing. I'm going to stick to that. I'm not going to change it. I'm going to be immovable. And I think they need to do it.
So originally I was being cautious with a prediction of 25 basis points, but having woken up last Friday morning to a large article in the Globe and Mail that really spoke to our financial metrics, it does feel that everything is pointing to that 50 basis point shift with rates.
So what's most important? What does this mean to the consumers? Because, you know, they hear 25, they hear 50, like it's like, okay, is this a bet? Right?
This is, how
does this
impact
affect them?
you? So if you currently have a variable rate mortgage product, what you're immediately going to see is one of two things. If you're in a static mortgage payment, you're going to see a shift between interest versus principal. So more of your payment will go towards paying down the principal faster. So it's so nice to finally see this shift. For those that are in an adjustable variable rate mortgage, on your next mortgage payment, you're going to see the benefit of a lower payment because your net rate will have come down by that 50 basis points.
You think that right now, a lot of times you're only paying the interest. So with this change, you'll be starting to pay off some of the principal. So you're getting equity back into your home. Now, what if they're on fixed amount? Because I know it affects them different. The variable rate, they're going to see immediate reaction. But I know on the fixed rates, are they going to still see some reactions?
So the fixed rates move with the bond yields. And so over time, if we continue to see a lower rate environment, there will be a shift with the Canadian bonds as well, which will lead to lower fixed rate terms. Another reason to ensure that you're also revisiting your mortgage and doing that mortgage checkup, looking at the rate that you currently have and exploring opportunities to break that term to secure a lower rate. For those that are looking to buy in the next few months or into the new year, this offers a great opportunity as well to shop between a variable and a fixed rate product right up until your closing date, taking advantage of the current shifts in the market as well. So there's opportunity here for clients to revisit from an affordability standpoint. If you calculated those numbers and felt uncomfortable with what that monthly obligation was going to be, you can now revisit your qualification and you might be surprised to see that the rates are now in line.
So the other thing is they're talking about January coming down another quarter point.
Yes, at the end of January.
And I believe that will happen. So, as of tomorrow, I'm banking on we're going to see a 50 basis point drop. And in January, I'm banking on another 25. So that's another 3/4 of a point.
75 basis points.
Right? And we've already got the drop already. So, if I'm going to buy a property, let's say I'm going to buy a property, well, you're going to get the lower rate as of tomorrow. That will take effect as of tomorrow. So by the time you close, you're going to get that 0.25% in January.
Of rates continuing to fall. Absolutely.
Right? So my belief is for people that are looking to buy, I would get off the fence now because as rates continue to go down, home sellers are going to say, well, there's more affordability, there's more buyers out there. And I'm not saying prices are going up, and that's important because, they say the market was up 44% in sales in October and 40% in November. But yet in October, prices increased by 1%, and in November, they increased 2.6%. Now that's on average. but it still increased in 2 months at 3.6. So you look at a $1 million property, 3.6, you can't save up that amount of money. No way. So, you know, if you've have all your bags packed and put in the closet, maybe start unpacking your bags, call a realtor, call the mortgage broker, call her first, and let's start that home hunting right now, because more and more people are going to come out, because a lot of people have been waiting for this. So when more people come out, what does that mean? It means there's going to be less inventory. It means there's going to be more competition. So by prices coming down, interest rates coming down, it now gives us an opportunity to be able to believe in that home ownership. So what would you advise someone that's sitting on the fence now?
I believe it's important to evaluate what your options are now. You know, we don't have enough supply.
No,
That's
supply.
what it comes down to. So eventually, if your goal is to enter the market, now is the time with these reforms and these changes to revisit your opportunities, to look at what options are available to you, whether it's a condo or, you know, a detached or a potential townhome. This is the time to revisit the numbers, look at what you're paying currently, and look at the options of moving into home ownership.
But I tell you not to do it alone, because some people get up their little guides and stuff like that. And I'll tell you, that for a lot of people can be very confusing.
And scary.
Right?
It's not
Because you really need to sit down with the bank or the mortgage broker and really go over those numbers, because everybody's different. There's no situation that is the same. Every situation is different. Your equity, your wants, your needs, how much you can afford to pay. It's different from everybody. That's why you need to talk with a professional mortgage consultant, that you can find out exactly what fits your terms and what is affordability for you. But under all these new rules and changes, it's all to your advantage. Less stress and more affordability for everybody involved. And if me on the real estate side, you know, me or any of my partners that can help you out, to sit down with a consultation. So by talking to right professionals, we can get the right plan for you. And I always believe in, we only sell one house at a time, one family at a time, right? And I know that's the way you are with helping them refinance or finance, that one person at a time. And everybody's different. So there's no two situations the same. So I want to thank you for coming in today. I know this was informative for me and some of my agents that are here. So tell them again where they can reach you, Rakhee.
They can reach us on Instagram if you're looking to be educated at Mortgage Savvy, or you could reach out to me directly at 416-720-7295, and I believe we'll share the email as well.
Yes. And us, you can reach that Daryl King at homes@darylking.com or 905-907-5464. So we hope you thought this was very informative. We want to wish you, everybody, the very best, healthy, wealthy, happiness, and spend with family and friends over the holidays. All the best. Take care. Bye-bye.
Happy holidays.